Good evening, everybody, and welcome to this evening's live market analysis session. It's a public holiday over here in Perth, so if you are Perth-based, hopefully you had a wonderful day. If you're not, well, I hope you had a wonderful day at work anyways. Let us head over to the disclaimer, which is boring but important. It says that everything we're going to discuss today is general in nature and hasn't taken into account your personal financial circumstances or particular needs. So before acting upon any of this general advice, you should consider it carefully or seek the help of a financial professional to help you understand whether it's appropriate for you. Other than that, it's important to understand that investing is risky. There's every chance you could lose money in the markets. And on top of that, every decision you make is your decision. It's not mine. You're responsible for what you do, not me. With the boring but important bits out of the way, the fun part, which is let me know what you'd like me to look at today. I'll give you my best technical read-up. It could be a chart of stocks, bonds, indices, crypto. We might even do a macro whip around. Rebecca has requested that specifically today. Or it could be anything about trading, the 3 M's of trading, that is methodology, money management, and mindset. I can see people are already sending those requests through. I'll do ASX first and then USA second. With Rebecca's request in mind, let me head over to the Amy broker window, and pure coincidence 360 is coming up just alphabetically. It's quite literally the first stock on the list, and what a great chart that was. I'll be honest with you, I wouldn't have been long before this. It's not that you couldn't have been long before this. I just didn't think it was the best chart out there. Certainly it was acceptable. I mean, it was setting up for a long. We had light green zone, dark green zone, had some decent candles, but the price action was pretty awful. And there were some pretty big key points of supply in the market as well. So I must admit, not the one I would have gravitated towards, but it certainly did break in line with the trend, and it really thus was earnings season, wasn't it? It was an exciting one, and hopefully it turned out well for you. Maybe you can we can do what we did last week, where you talked to me about your best and worst earnings season trades. Let's get some of the scratchings on there. You can see I haven't updated this one for a little while. The NASDAQ just keeps going from strength to strength, and look, I'll be honest. It's just doing what it's supposed to do. I think what I was about to say there is, before you met me, you probably would have been surprised by this. You probably would have been one of those people going, wow, isn't the US market going up a lot, or it's going up too much, or you would have probably subscribed to the bullshit that is being fed to you by the media that, oh, it's all 7 stocks, right? Oh, it's 7 stocks, it's too expensive, it's overvalued, the PE is too high, and all that other crap. Right. At the end of the day, none of it matters. All that matters is what the people with piles and piles of money, the important people, not us, of course, but the important people with piles of money, what they're doing, whether they want to own stocks, and whether people who already own stocks want to get rid of them. And this just speaks to me of a market where just this idea that all these risks are on the horizon, threatening to derail the global economy, the US economy. It's just not important within that spectrum of market participants. Now, this is all backward looking. We are looking at history here, and some would argue ancient history. That's what technical analysis is. So those fears may come to the surface tomorrow, but the good news is you know how to spot them, and they will manifest themselves. That supply, that excess supply, that is the money, the smart people with piles of money, when they don't want to buy anymore, right? You won't get those white candles, you won't get those lower shadows. The people who own shares, when they don't want to hold on to those shares anymore, they'll be offloading them, and you'll get black candles, you'll get upward pointing shadows, you get lower peaks, lower troughs. So when those fingerprints of excess supply in the market, we'll know exactly when they are. And until then, you don't need to panic, and that's good news. Double green lights here to keep going with us applying risk into the market. Now, when we do these whip arounds, we typically start here, and then I like to go to the Russell 2000, not the S&P 500, not the Dow Jones, because honestly, I think they're quite irrelevant. But the Russell 2000 is the heart of corporate America, and you can see here, this is breaking out. And I think the last time, it's been a while since we've done the macro whip around, we might have said something along the lines of, NASDAQ looks great, doesn't it? Russell doesn't look so great, and that concerns us. Well, good news, Russell's starting to look very good. You can see I haven't adjusted the scratchings for a little while, so let me get rid of that so it's no longer relevant. And I can even change this one because yesterday's candle, what am I talking about? Friday's candle is a close above 2072. So I'll turn, you can't see this, turn that off, and I'll make that, must have been the 1st of March, if I'm not mistaken. And you can see that now that resistance zone stops there because we've closed above it, so we've nullified it. And if I just sort of, well, I won't zoom out, I'll do the weekly chart. I know it's a bit tough to see, but we'll zoom in a little bit. And we'll get a better picture of what's going on. And on the weekly chart, actually, the price action is really, really good, isn't it? You can see some great white candles, fairly moderate pullback to the light green zone, and then bouncing off that, it is acting as dynamic support. And some good candles in here, nice lower shadow, big white candle closing out last week's, and that is a closed out week. That's important too. And every chance here we're heading into the next level, which is 21.39, and then probably into 22.89 after that. But that is me prognosticating, and I don't like to do it. All I can say is right now that this is looking like a picture of excess demand, both on the daily and the weekly, and therefore I don't think there's a red flag here. And that's really all we're trying to do in this whip around the ground, is look for a red flag. I will go to the total return, not the total return, the equal. I don't have the equal weight on here, but I might be able to find it on TradingView. But anyway, I think between the NASDAQ and the Russell, we're going to get a pretty good picture. I might just skip over to Europe because I want to see if this building enthusiasm that we're seeing here in equities, that's sort of spreading out the risk curve. And that's something we haven't been able to say a lot of over the last really 12 to 18 months, is that spreading out the risk curve, because there is all this talk that everything is concentrated in these, to be fair, very high quality big technology plays. But no, it's starting to this rally is becoming democratized. And if we're seeing that growth spread across the pond there to Europe, then that is also a very good thing. It's not an accident. And it's not an accident. We're seeing that's the French market, the German market now, the Euro Stocks 50, the FTSE 100 is interestingly lacking, but not awful. And then we head to Spain, and that's actually a little bit lacking as well. Look, still, I think, on the good side. Heading over to Asia, the Hang Seng is starting to pick up, but we know these are still long-term downtrends. The Nikkei has been an absolute monster. Took out its all-time record high, set back in, I want to say 89, if I'm not mistaken. And that is a seriously important break there. So again, risk-taking in abundance. In India, it looks pretty good also. Even this one. How about this? This is the Shanghai Composite Index. I know you can't. Let me do this, and then you'll be able to see what charts we're looking at, not just the codes of them. Let me do that. There you go. That makes more sense. So this was on the back of the interest rate cut. Now, and that is the actual interest rate that impacts mortgages. Up until this point, we've had cuts in rates that impact what the banks are spending. But this is one that actually impacts mortgages, if I'm not mistaken. Correct me if I'm wrong. And therefore, it is potentially going to do something to stimulate demand of the property market. And that has been something that's lacking up to this point. So we are seeing an oversized reaction because something different has occurred. And there's that old saying, if you keep doing the same thing and keep getting the same result, you need to do something different to get a different result, and something different did occur there. So that's interesting. If that picks up and turns that Chinese economy around, that would be good for everything. And that's the A50 there also showing that very important shift in sentiment. You can see those white candles coming in and a really very shallow pullback hitting the long-term uptrend zone. Then potentially if we break above that, we really could stamp this out as a really enduring low there at 10.8. So that's all pretty impressive. Bringing it back home, how are we going? Not bad. Yeah, record highs, can't complain about that. Today's little pullback is insignificant. I feel it's not a great candle, upward pointing shadow, but it is small within the context of this overall trend, and I'd be happy to stay the course there. So all good news. What sort of sectors perhaps should we be looking at? That one's done very well, no complaints there. Energy is in the doldrums. I don't think you'd be actively looking for stocks there. Financial stocks doing very well, happy with those. Gold is very volatile, up and down is the words I was about to use. Not sure I'd be looking too hard in that sector. Healthcare actually looks like that's starting to come off the boil. I saw the Resmed chart. We haven't looked at that one for a while. That has really come off the boil. Technology looks amazing. That's another technology sector there. Materials, so looking largely resources, but also got the building products in there. This is strictly resources, and we can see the haves and the have-nots. We can see what the fund managers are playing. But I'll say this: if the resources do catch up, that could give us that extra adrenaline boost to really make some new highs. Property's very good, but yeah, without those resources, we might be a little bit more subdued. Consumer staples, nothing doing there. Telecommunications, not where I'd be looking. Utilities, not where I'd be looking either. So just a sector watch. What else can we look for? We can look at some London Metals Exchange prices, and I'll switch to the line chart here for you. Actually, that's doing better than I thought. I haven't looked at this for a little while, but copper's actually picked up there. It was looking quite awful down at those February lows, but pushed back up above the trend zone, which, to be fair, is very neutral. So not a complete write-off is what we'll say on that one. The nickel price actually has started to rally. There you go. Maybe a bottom there, too early to tell. We want to see a nice major trough, rising major trough to stamp out that low. What is lead? Looks lousy. Tin actually looks pretty good. And zinc, no, that one looks lousy also. I haven't updated my lithium charts for today, but we have obviously been hiding under a rock if you haven't been following me on Twitter as well, to know that the lithium price is starting to rally very gradually. That's lithium carbonate. If I zoom that out, we'll put it into perspective. But a rally nonetheless. Lithium hydroxide yet to rally. That is based upon Friday's closed, and that's the new contract. That's spodumene concentrate. Sorry, the spodumene concentrate index there, also turning up. I think that's a pretty good whip around. I will do something else before we go, because we'd be remiss not to talk about the bond. We'd be remiss not to talk about Bitcoin, which is doing fabulous. And you might have seen my tweet maybe a week ago. I know it was maybe on this candle here, or just as this candle was starting, where I said, what's wrong with this chart? And it is a little bit cryptic, and some of you do bite, and you do actually try and tell me what's wrong with it, but I am actually trying to be a bit cheeky there and saying there's nothing wrong with the chart. And to be fair, I think the 2 or 3 times I've done it, the price has taken a bit of a leg up from there. So I'll put it to you again, what's wrong with that chart? And I'll answer my own question by saying not a lot. And I'm pretty happy with the way that's going. This is the most profit I've ever made in my crypto holdings ever. So that's always a good sign. And it looks like we're on track to at least tickle that one, but I will be very, very attentive to signs of potential supply around there. I think we'll actually break through. I think we could have a proper blow-off at some stage in this one. And as I was about to finish the sentence, we'd be remiss not to talk about the bonds, and I think we always should look at the bonds in this session. And why don't we start with the Japanese ones? And those yields are creeping back up a little bit there. We did say that they did pull back through here, which is good for equities, but just creeping back up there. How do the US 10s look? I expect they're probably the same, creeping back up. But the fact that the stock market isn't worried about those things, that's also pretty good. We can look at the 10-year inflation expectations looking pretty subdued here, actually. And, potentially could break down from there. That wouldn't be a bad thing. And the Aussie 10s. Look, I don't think there are any major alarm bells there. So we will normally look through these charts for those red flags, and we pretty typically, they are weekly charts, by the way. I don't think it changes the analysis. We'd normally come here to the to the Chinese property indices and say there are red flags, and they still are pretty lousy, aren't they? So it's not really the property sector that's rallying just yet. And we might even look at some of the US banking indices, and they're not looking that great either, to be fair. I mean, that's the regional bank, that's the big banks, and then we've got the regional banks. So that's worth keeping an eye on. A little breakthrough here could put a little bit of volatility through the major indices. So if I could summarise the macro today, I think it's looking very good. If there are any pressure points here, Chinese property indices aren't great, but they're far better than what they were, and this one is a little bit on edge. We saw that bond yields were creeping a little bit up, and we're mindful of what the next move might there be. So just looking at these on the daily charts again, just to tune your own, they have crept up a little bit, but I don't think there's anything too sinister going on. Okay, with that done, let us head over to the offline requests, and I've got from Craig I have DLI in Australia. So let us head over to here and to here and to here. Delta Lithium. Okay, well, look, some of the lithium stocks did rally. We know, obviously, as you said, lithium prices have popped up, so there's a bit of short covering going on, a little bit of speculative buying, bargain hunting. And until we get the higher trough, so what you want to be looking for now is we've made the first trough. So we've got something that clearly was a downtrend. Let me change, that's red. Where do we go? Something that's a bit more visible, maybe that colour there. So we've got the clear, let me go for that is a thick line. Yeah, okay. Oh, hopefully you can see it okay. That one there. So we've got our downtrend there. That's dotted is what the problem is. Let me try again. Turn that off and try that again. So you can see that's better. Okay, so we can see the medium-term downtrend, lower peaks and lower troughs, and then that gives way eventually to higher peaks and higher troughs. So the point I want to make here is that we have formed for ourselves, and we're not going to do this on all the charts today, but just to illustrate what I want you to look out for. We're calling this what's a long-term trough, or a long-term trough, or a major point of demand. Okay, and the reason for that is because we have the medium-term downtrend on this side and the medium-term uptrend on this side. If you can't remember what those definitions are, medium-term uptrend is simply medium-term downtrend equals lower peaks and troughs, and obviously medium-term uptrend equals higher peaks and troughs. Okay. So what we want to see, obviously we still want to see interactions with the long-term uptrend zone. We want to see it hit that, come back, move through it, but we do want to see the next higher medium long-term trough major point of demand. I've got too many acronyms. I'm just going to stylistically show you what it looks like on this side. So if we have our downtrend on here, coming down, and we start to pick up on this side, forming our first major point of demand, you might even get something like this, but we want that pullback to be very shallow, and then we want to see something like this with some nice price action coming through. And if you think about what that's forming, and I know it's highly stylized, but you will see this. There's your major point of demand, and there's your major point of demand. It's really once we've got that confirmation that we are not going to move back into that downtrend phase because of this price action, that we've actually got building demand through here. That's when I think you can more safely, if that's good grammar, start to look at some of these. So if you're going for these, it's nothing more than an aggressive trade at this stage. Now, let me just quickly comment on DLI before we move on. I don't think there's much to go on here. I'm encouraged by this candle here is the most encouraging thing on the screen. In fact, that one's not bad. So the fact we did move back into high peaks and high troughs with some actually two white candles is encouraging. Is this an aggressive setup? Look, not for me. I think the last 3 days are telling you this promising, but fledgling rally is fizzing out a little bit. It's ho-hum. Look, out of the universe of aggressive setups, I'm sure we're going to find better than this. If you had it, well, clearly now there's enough in there to hold it. If you're leaning more towards being a sucker for pain sort of thing, but that's up to you. Let us keep moving. We're going to go to PPM for Rebecca, and this is a better chart. This is more of our turnaround play. You can see, apart from the higher major troughs, which honestly the price action is so sketchy here, I can't say we got one, although I do think we did here, but it's minuscule to see. It's in here. We are seeing the interaction with the long-term trend ribbon, which is what I couldn't show you on DLI, pushing through. To be fair, this went straight through it. Ideally, we get a little bit of a pullback, so you might get some price action like this. That's the ideal scenario. We didn't get it. It's pulling back now and then popping back up. So that candle there is actually a pretty good one to be looking to add risk, because you're pushing into a clear point of supply. Hopefully, all of these things are sort of clicking for you. You go, oh yeah, I can see that too. I saw that before Carl saw it. So you can see why we pull back here. when you get these pullbacks from very logical places, they're not something you really need to fear. So let me, oh gosh, drawing in this sometimes is a nightmare, and if I haven't been doing it for about 15 years, it would probably drive me nuts. But anyway, so I think that was just a normal boss. It's no surprise to find this supply here. Pullback holding of the long-term trend ribbon now, the short-term trend ribbon, which is now acting as dynamics support. And then if you wanted to, if you were that way inclined, you could go for it. Would I have taken the trade on that day? No, I don't think I would have, because the price action is sketchy, to say the least. I reckon there'd be better trades out there with cleaner price action. But just to show you some of the theory here, but also to cover Rebecca's stock, and Rebecca's interested in it. That's fine with me, because it's not. I'm sure it's not the worst thing we're going to see today. If I had it, I would happily hold it. If I didn't have it, I've already told you how I feel about it. JDO, would I be, if I had it, would I be selling any of it? No, not at all. That's of course why I'm happy to hold it, but just indicating I don't see any major signs of excess supply that would consume me at this stage. Judo Bank is looking very similar. Probably not a coincidence. They're very similar companies. And it's showing, again, that push through the downtrend zone, which is starting to transition. So that's what we're looking for here. And really, you should, in these sessions, hear me repeat myself. Because if you heard me say something once and not say it again for a whole hour, then something's wrong with my methodology. But if you hear me say, well, this is exactly what we're looking for. We said Pepper, it really burst through and then took a while to pull back, but only to the light green zone. This is what you tend to see more often, is where you push through that long-term trend ribbon, you come back, you hold it now, coincidentally also the light green, but that's even better. And then you see the lower shadows. See the lower shadows? So these lower shadows are we know what these are. These are the fingerprints of excess demand, okay? Particularly when you see them coming in at those dynamic support zones. They were resistance zones, now they're support zones. So that is very important to see those. And then, there's even another little one here. And then I'm happy to add risk even on those, but when you see the white candle coming in after that in this consolidation, it's almost obvious, isn't it? And hopefully your eye is being trained to spot stuff like this yourself now, and you're going, that's just, I knew that. You're kind of going, I knew that candle was coming. Okay. So yeah, it's fine. So I'm going to go ditto with PPM. I think the price action here is a little bit better than PPM. There's slightly less sketchy, but not knocking my socks off in terms of clean price action, but better than PPM. And we know, obviously, we are getting pretty close to a major point of supply there. If I had it, I could hold it. I'd be mindful of any black candles or upper shadows that would come in. That might cause me to manage my risk, but not doing that at this stage. Would I buy it? No. This is a long way from me putting my money at risk on it. Okay, but don't let that dissuade you from asking about it. You're here to learn and to get an opinion, even if it's not the opinion you were hoping for. That's okay too. Now, Rebecca did ask about these, but she did put an asterisk on it. She said, for an aggressive setup. And I can see some stuff here. Now, obviously, the last time we talked about it, I put some red arrows on there, which might indicate how I feel about it. Let me delete those right now. They may reappear in the next 30 seconds, but just so I can see what's going on underneath. Look, I think the key here to Calix are these two candles here. Okay, now a huge amount of demand. Or when I say huge, I have to hold myself back there. I said huge, and then my brain said, no, look at the volume to see if it's huge. Yes, there's demand. Excuse me. But is there a huge amount of demand coming in? And I'm not so sure. So these, let's do it this way. So we can just go here, and you see, hopefully you see that blue line going down. And there was, there was more volume than the last 4 or 5 days, but look, it's decent volume, isn't it? You can see compared to the really 12, 18 months, this is all elevated volume. So look, I'm going to say, quite a bit of volume did come in. Look, that could have been better. So getting back to the point, which is these are the key candles here. Yes, substantial demand did come in at this point, but we are seeing that demand being put under extreme pressure. So much so that when we actually closed beneath one of those two important candles, they're crucial candles, and that really negates at least half of that demand, and the next one would be here. And look, there's really, apart from those two candles, very, very little to like about this one. And again, in that, what I said, the universe of aggressive setups, I think we'll find much better than this. And just for completeness, let me just redraw all of those red candles on this one, so we are not in any confusion as to how I feel about it. Let us move on. WDS also for an aggressive setup. Well, look, there you go. I drew 1/3 on it for an aggressive setup, and I know I put that caveat on it. But I know I also said, hey, if you're doing this, you are doing this with complete eyes open that you are going to be bashing into this real soon. And then look at the candle we got at that level. Bleedingly obvious that we are seeing. What is that one called? If we said before that the shadows pointing down are the fingerprints, of excess demand, and these must be the fingerprints of excess supply. Okay, and when that candle, ladies and gentlemen, please listen. If you have just fallen asleep, wake up, because what I'm about to say to you here is crucially important. When you see that candle there, along with its best buddy, that one there. Remember, we used to call them supply buddies. They are buddies, aren't they? Candle 1 and 2, the labels will be appearing on screen very soon. Candle 1 and Candle 2 are what we have previously labelled supply buddies. Okay, they are supply buddies. You'll often see them together. That's why they're buddies, and they're not good. So if you did plus 1/3, let's say you saw that candle and you plus 1/3 in here, sometime during the day you managed to get in, let's say you managed to get in at 31.85, for example, then you would see that candle, and the next day you would get out, and you probably would have got, let's say, somewhere around the open, let's say you got 31.10. You lost 70 cents per share, okay? The good news is, if you choose to do this aggressive stuff, okay, at least you have a roadmap on how to manage your risk out of this stuff, okay? And you're going into these knowing that they are aggressive, and therefore you're putting a smaller amount of risk on them as well. Would I be still in Woodside? No, absolutely not. I can't see a single reason on screen to have any of my money at risk in Woodside. Now, what you do with your money is your business. Let us go to Max, who has 4DX, which looks half decent, doesn't it? I mean, we're seeing a little bit of a rally out there. And thank you, Michael, for telling me the ticker code for the SPXEW. We're going to look at that later on, because I do want to see how it looks. I think this looks half decent. 4DX. Now we've got the major point of demand put in. Okay, hopefully you spotted that. You just went, oh, Carl, there's an impasse. Why is that an impasse? Well, do we have lower peaks and lower troughs down this side? Yes, we do. Do we have high peaks and high troughs on this side? A little bit of a squinty, but we do. And today, in fact, I believe is the confirmation day that we do have our higher peaks and higher troughs. Let me tell you why. That is a peak, and it is a medium-term peak. To be precise, that is a medium-term trough, okay? And let's just call that one a medium-term peak. Let's call this one a medium-term peak and a medium-term trough. And it's very easy to see here on the left-hand side of this pattern. And you can see the inverted head and shoulders, isn't it? So one of those classic technical analysis patterns that I never talk about. It's not that I don't use them. I might just call them something a little bit different. I certainly don't use all the technical analysis patterns. But we can see this idea of this inverted head and shoulders. But what we're actually doing now is putting some definitions to it. Because when you go into the textbook, they use this phrase, inverted head and shoulders, and it's bullish. You go, oh, that's exciting. And then you spot them everywhere and nowhere. What we're doing now is actually enabling you to define these very precisely. So we've got the lower peaks and lower troughs. It's very clear. In fact, we've got troughs back here that are lower. What might not be as clear is on this side that we actually do have higher peaks and higher troughs. And you say, Carl, I can see the troughs. I get it. I can see that trough is higher than that trough. Big tick. But I can't see how you're calling this so early to say that there are higher peaks in play. And I'm saying, no, I haven't made a mistake. 100% we do have higher peaks. You just can't see them yet. So it's a bit sneaky, but by the very fact that we have closed on this candle above this peak, wherever that next peak is formed, and we don't know where it's going to be formed, and that dotted line drives me nuts. So we could have a candle like that, we could have a candle like that, we could have a little blowout candle like that, and then we could come down like that before we finally form it. But wherever it forms, I guarantee you, it must be higher than this peak here, okay? It has to be. Even if it forms tomorrow. So in fact, what we get is this tomorrow. This will become a peak, all right? And therefore it's higher, okay? So again, this is one of the benefits of using price action, or using it the way I use it, is that you don't always have to wait for stuff to occur. You can actually get in a little bit earlier. And we've obviously often talked about getting into breakouts a little bit earlier, and my method for that. But this is the ability to sort of get into this new trend earlier, understanding that that peak will come at some stage. And we do, in fact, we have met that rule of high peaks and high troughs. So that's good. Remember, we talked before about, look, ideally in these turnaround plays, you have a second one. I'm not saying you have to wait for those, but that is the ideal scenario. I need to get to the point where I say what I would do with this. Look, I think it looks okay. I'm not sure there's enough going on here, and the price action is as clean as I would like. I mean, ideally, you get something that comes above this peak. So this line, this extension line here, let me grab it, comes a bit higher. And then the pullback is only to this peak here. So remember, old points of supply should act as points of demand. So that's not where I wanted to go. So we get something that looks more like this. This would have been better price action, right? And that would have got me a little bit more excited about it. So look, we've got reasonable price action. The candles are okay. The volume's not giving me a great indication that there's a huge amount of money trying to get into this. And, I'd give it a 5.5 out of 10 sort of setup for a bit of a turnaround play, but I'm not sure if it's going to get my money. Having said that, I do think it's going to go up. How about that? I think it's going up. I'm not sure I'd buy it, because I think I'm going to find better things today. Hey, if I don't find anything better than this today, I might come back and look at it, because, hey, markets are rising and I want to get some risk on. But given markets are rising, I reckon we're going to find better than this today. Hey, if I had it, I'd hold it, wouldn't I? If I had it, and I love the story, because, I don't know who I'm talking to. Some of you, you're still in that frame of mind, and that's cool with me, that you need to know what a company does when you buy it and you own it, okay? You wrap yourself in that safety blanket. I know what this does. Hey, horses for courses, right? Whatever makes you happy. And if you love this thing, right, and you know the story and you love it, I could hold it if I had it. That's where I'm going with this. And that's why sometimes it sounds a little bit contradictory, where Carl says, I wouldn't buy it with my money, but, if you had it, you could hold it. That's where I'm going with that, right? If you know the story. I don't know the story on this one. And please don't tell me, because I couldn't care less. Let us keep moving. I'm nearly coming to your ones today, nearly through the offliners. It's important I get to the offliners, because I know it's a crazy, silly time for most of you. And I understand not everybody can be here, but I want everybody to have the same access to this session. And I'll be here as long as it takes to answer everybody's questions. Don't worry about that. Let us go to SDR. Oh, this is a nice one. Siteminder. I do know what these guys do. Software company. They manage all your hotel functions. Let's call it that. And they had such a hard time for a long time. On the way down, I'd go on the call and I'd say all the way through, I wouldn't buy that, Koshy. No, I think that's pretty terrible. No, not interested. And of course, it came here. Maybe we're doing some of the Think Market sessions where it broke above. We talked about this probably as a turnaround play. All the white candles came in, high peaks, high troughs, all that stuff we've talked about already tonight. Had a little bit of a flip back here, didn't it? But look where it stopped, and it's hard to remember. It's probably the right way to put it. It's hard to remember sometimes that my ribbons don't exist. They really don't. Off we went. Look, it's been a gradual and grinding move higher. I wouldn't say this is the cleanest and bestest price action I've seen, but it does have the hallmarks of a good trend, and the candles, as overlapping as they are still very much demonstrating excess demand with those lower shadows. So what I'm talking about is lower shadows, lots of white on the screen. Even when it pulls back, that might have been earnings related. We're still getting that by the dip mentality. So these lower shadows, you have to remember, they're not just, it's not just, Carl told me that lower shadows are good. It's the price coming down in the session. The price, there's excess supply in the markets. People are selling, and the buyers are backing away. And really, one element of those buyers are backing away is probably the weak money. The people that really don't understand the true value are backing away, and then at some stage, the big money, the smart money, the money that does understand the true value comes back in and soaks up that supply. And every time you soak up a bit more of that supply, there's a bit less, isn't there, around for when the buying does get more motivated, and that does facilitate a move higher. So they even represent supply removal. That's another way to look at it. And even when we have some bad news, we still get that buy the dip, that accumulation mentality. And this is exactly what I just said. They are supply removal, and sometimes that supply runs out, but that desire to be an owner is still there, and then you get the move quite quickly. If I had this, I would 100% hold this. Could I consider buying this myself? I absolutely could consider buying this myself. This is the best setup we've seen so far. I just want to look back and see if there's anything really sinister going on, because on the way down here, there were people caught in it, and there are people that are still caught in it from the float. Okay, and they would, you know the feeling of getting into a float and it's a crap one, and all you want to do after you've held on for 2 years and that thing, you bought it at 20 cents or 30 cents or 50 cents, and it spent 2 years going down to 5 cents, and for some reason beyond you, it's finally started to go back up, and you just want to get the hell out of break even, right? So there are going to be people in the market who feel like that, and they will have a little bit of a say on the price action. But look, we've got a little bit of a ways till we get there, and the price action is good enough to want me to participate until then. So I'm happy with that one. Let me go back to there and make sure I'm on my default zoom. There we go. Always look at the next chart with your default zoom. Now, Terence asked me this, might have been a week or even 2 weeks ago, and it just got buried in the inbox. So Terence, I apologise for not doing this earlier, but I'm doing it for you now. What would I have said 2 weeks ago? I would have noted a few white candles creeping in and probably said it's a bit aggressive for me. I don't think I would have green lighted this one even for an aggressive setup. It has gone up since then. I can't tell the future. But we are seeing some problems here. It is banging up against something that doesn't exist in my long-term downtrend ribbon. And as much as it doesn't exist, boy, are they accurate, as you've seen, and supplies coming in here. So yeah, today's candle is pretty nasty, and I think if I had it today, would absolutely be a signal to manage my risk if I had it. Obviously, I don't have it, and I wouldn't have it because I can't own this sort of a chart. But yeah, that one looks a bit disturbing. Could you keep some risk on the table? I think that's probably the more pertinent question if you have it. Clearly, I'm telling you, some risk needs to come out. I think there's enough in here to keep going if you wanted to keep going. And that's only if you know the story and you think this is the best company ever. That's not me. That's not how I do things. But there's just enough to keep you going. I would be really, really concerned if we closed beneath that trough there. I really would find it hard to maintain any risk on this position beneath that level. Let's go to PRN. Similar charts here, aren't they? Look, there's some good stuff happening here. Don't get me wrong. Good stuff happening. I'm trying to find the right candle in here. Look, not bad. These aren't that convincing, and that's probably why we had this pullback. Decent one here. Today's disappointing. I still think we're just under the influence of that long-term trend ribbon. There's also a really important supply zone here. And because it was a demand zone, so let me get these colours right for you. Really, really important. Make sure, again, wake up for this bit. Okay, the more demand that occurs in this zone, okay, this is a seriously major point of demand, okay? It's a zone of demand, isn't it? It's a major ZOD. Never used that acronym before. It's a major ZOD. And got to think how many investors got in at that level. And then when we got to here, really cursed their luck, didn't they? I mean, they thought it was cheap there. They'd never met me before. Of course, they were buying this sort of rubbish, maybe because some value investor told them it was cheap. And then they got down here and, the situation made them very sad. And really all they wanted there, they kind of said, please God, I'll do you a deal, right? If you just let Perenti go back to my break-even price, I promise I'll get out and I'll never listen to XYZ value investor again, which is probably a good commitment to make. Now, the problem is the more major that ZOD is, the more major the ZOS is going to be on this side, and you all know what a ZOS is now, right? It's going to be a major zone of supply, a major ZOS. All of those people, and you can see, look, I don't make this stuff up, ladies and gentlemen. You can see the reaction, you can see the response we got there. And sometimes my dynamic trend ribbons are just by coincidence, almost by coincidence, sometimes just reinforcing where some of these static zones are as well. But when they come in together, it's extra concerning. So yeah, there's some good stuff happening. We're seeing higher troughs. We're seeing some decent candles. But that demand, which is so clearly coming in, is butting up against that supply. Now, I don't know the future. So there's every possibility, I suspect not, and hopefully you're suspecting not as well, because we're not really seeing enough here, are we, to convince us that the money is coming in. The money is coming in for this thing, as opposed to people with shares just trying to get a better price than before, right? It's just, oh, thank God this has bounced. And look, it's actually, and this is how stupid markets are. I was about to say this is how stupid investors are. Let me say that. This is how stupid investors are, because investors make up markets. Look where it was bouncing from. Look how many times it bounced, ladies and gentlemen, from something as stupid as $1. I mean, surely people should be ashamed of themselves. Oh, a dollar's cheap. A dollar's cheap. Now a dollar represents break even. Anyway. Okay, where are we heading? That's all the Aussie offliners. Let's do your requests here. I might pick up the pace. ASX, we want MMI. This one's coming from Peter. Thanks for working on a public holiday, says Sudesh. No, that's fine. No, it's only a Perth thing. You kind of get used to it over here in Perth, knowing that it's not a public holiday anywhere else in the universe. We're unlike anywhere else in the universe, of course. Some good stuff going on here in Metro Mining. Today's candle is concerning. Wasn't a huge amount of volume there to say that, oh yeah, everybody just wanted to get the hell out. But at the same time, there are not many people wanting to get the hell out. Let me just say that again. Look at the volume. Look at the volume. We can say with confidence there wasn't a huge wave of people who own these shares trying to get the hell out. All right. If there were more people trying to get the hell out, we would have seen more impact on volume. But the people that were trying to get the hell out, the few of them, they didn't find any demand, did they? Demand ran away today, and that is concerning. It's a sketchy chart. It's hard for me to do good technical analysis when you're seeing candles and price action like this, right? You get full candles. Sometimes you look at, let me zoom in just to show you. But I think some people might get confused. Carl said my stock I really love has got sketchy price action. What does that mean? When you have, look at this, open, open is the low, the high is the close. You've got just candles that just blip, candles that's there you go. Your Honour, I rest my case. It traded on the day, but the open, the high, the lows, the close, they're all the same price. These are sketchy candles. When you see this sort of blocky or just full shadowy sort of stuff, that's what I call sketchy. It diminishes the effectiveness of my methodology, okay? And not only do you get, sort of like we saw in PPM, not only do we get these sketchy candles, but the price action is far more overlapping, okay? Often it is a sign of illiquidity as well, okay? So it's harder for me to do an analysis, but that does concern me. If I had it, I'd manage my risk on that candle, but only a portion of my total risk. I want to still have some skin in the game because of this and this, okay? Let us get on to the next one, which is FND, which is much cleaner. Okay, so we're getting proper candles here. Now, it hasn't always been the case, and sometimes candles do change. Sometimes stocks change. Look at this. This was really sketchy stuff, but then it enters the market's mind. It becomes something that people are interested in. And what is that delineator? What changes it from something that people aren't interested in with sketchy candles to something people are? And you can see right there, it's the volume burst, okay? The volume, it's just like the volume knob. Volume on a stock chart is like the volume knob on your stereo. You turn it up and boy, can everybody hear it, right? There's a party going on. Doosh, 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 doosh. People can hear it from across the street. I go, what's going on over there at Carl's place? Oh, let's go check it out. Okay. That's what changes. That's that tectonic shift. And then we started to get good price action from there. This one's fine. If I had it, the trends are all still fantastic. There's a big shadow there. That's disappointing. The last two candles will tell you that there is supply active in the market, but there's also demand active in the market as well. I'd be concerned if we were to close, say, under there, because the demand, which has so clearly been working in the system, this is the last demand to come in, right, as far as we know. We don't want to see them taken out. But until then, I think we're okay. Would I buy it here? No, I couldn't buy it here because the candles aren't ideal at this stage. Let us do RUL. That's another big rally, but also a really interesting turnaround play as well. Again, I do remember going on the call and saying, no, wouldn't buy this, wouldn't buy this, wouldn't buy this. Obviously, I haven't been on the call for a little while, but around here, your big giveaway, I was hoping to see it. White candles, just exclusively white candles and high closes. And I wanted to see some volume, and look, pretty good volume, but not like the last one, but pretty good. In fact, what we're seeing here now is plenty of interest coming in. This was the key buy here. So this is compulsory, right? Compulsory at risk, let's say, when you see that candle, okay? When you see that candle off the green zone with some volume, after a consolidation, after a nice rally, in a turnaround play, we're seeing textbook stuff. We're seeing case study turnaround play, and ladies and gentlemen, you just need to go find that now, okay? And maybe this is going to put into greater focus some of the charts we've looked at today. We don't need to waste our time on many of those. And again, keep asking the questions. I'm not saying we don't need to waste our time on those in these sessions. I'm here, I'll give you my time. But it's so simple. My methodology really is simple, right? Look for that sort of stuff and you'll be fine. Where is it now? I think it's fine. Look, last two candles aren't ideal. Bit of supply coming to the market, but nothing too sinister. Obviously, I'm not going to buy it on those two candles. But if I had it, I think the person asking me probably has it. Look, that candle low there is interesting. I'd definitely manage my risk below there. But until then, I don't think you need to do a whole lot. If you do see, and you know what, you need to see the supply side buddies in between now and that happening, the close beneath that candle's low, then you know what to do. Okay, hopefully, Peter, that satisfies your requirements. Let's go to Wayne. Wayne's got Ramsay Health Care, which is actually, okay, super interesting. Okay, we talked about like this case study for a turnaround play. And again, I'm sure we've done it in these sessions where I've told you, look, Ramsay Health Care, like, come on, are you really? And this is the candle, though. This is the one we want. I mean, to be fair, as it's been going down, I might have said this 2 weeks ago. I can't remember who asked about it. But look, I said one of the saving graces. One of the saving graces of this one is, well, actually, as it's been going down with a bunch of white candles. So that does speak to me of accumulation of program buy orders. So that's good. It just hasn't been able to get out of the funk of supply until we get to this candle. And that is the tectonic shift for me. And we're actually seeing some pretty good volume. Could have been better, I think, but some decent volume coming in, but certainly enough. And maybe there just wasn't as much volume in there, because I think the chart before that kind of tells me if you were thinking about selling this, I think you probably already have. And then, okay, here's the thing. When you get that candle and you follow it up with that candle and that candle, that's about as good as you can get. We're also closing above the long-term trend ribbon. We're pulling back into it. We're testing it. We're holding it. We're now learning that this invisible zone, this make-believe zone, this fairy tale zone that I have created out of thin air for you to follow religiously, doesn't exist, but we are seeing it turning now, transitioning from what was the most reliable zone of supply into potential demand. As a turnaround play, this is a 10 out of 10 for me. I really think this is quite special. Now, having said that, you're all going to rush out and buy it tomorrow if you already haven't, because you already know to look for these sorts of setups. I don't know the future. Okay, this could be $40 next week. I don't know. I don't think it will be. I think it's more likely to be $60 over the next couple of months or so than it is to ever see $40 again. But any risk you take on this is your risk and not mine. Or, yes, it certainly won't be mine, but any decision you make is up to you. Any fault will lie with you as a result. That's for you, Wayne. Okay, Perry's got some US stocks. We're going to do those at the end. Michael saying good day, Michael. Jason's saying all US. We'll do those at the end. We have Nathan with Yancoal. And let me scroll down to the bottom. Don't put any more Aussie stocks, please. I know where we're going to stop, just so we can have some sort of end point tonight. Yancoal. Hi, Carl. Also, Yancoal. Also, will we see you back on the call anytime soon? I can guarantee I will not be on the call anytime soon, because the company I work for now, Livewire Markets, Market Index Livewire Markets, is a bitter enemy of Ausbiz. And I didn't know this until I started working for Livewire Markets. And I went. We had a strategy planning day in December, and they flew me over to Sydney, which was very wonderful and generous for them. It was only just started, and they did it in the same building as Ausbiz, and because they're actually in the same building, different floors, and we were in this sort of shared conference space doing our thing. And I've been to Ausbiz many times, as you know, and I thought, I've got to go visit all my friends at Ausbiz. And I went down and had a great visit, big hugs, and they're all wonderful people. I had the most wonderful relationships with everybody at Ausbiz, and I love them all. And they just could not believe that I had joined the bitter enemy. I'd gone to the dark side. And of course, the Livewire people are equally as wonderful. They're both two sets of independently wonderful people who happen to hate each other. So no, the chances of me being back on Ausbiz anytime soon are very, very remote. And there's a bit of a background there. And I'm sure you've all been in situations like that in your professional lives, where you've got two independently wonderful bunches of people that act like total tools because they hate each other for whatever reason. They view each other as competitors, and I don't think they are, to be honest. Okay, keep moving. Yancoal, I think it looks great. Again, another really, really nice turnaround play. This candle does it for me. Actually, this candle is very good. This candle does it for me, and that candle is just confirming everything I already knew. And I reckon there's probably even a dividend in there, isn't there, somewhere? So that makes it even better. So this is all very good. The only thing that I would counsel you to keep an eye on, so not counselling you against, but just be mindful that up there, no doubt we're going to see some pretty significant supply, but it's miles away. So if I had it, I would happily hold it. If I had it, I'd be looking to add risk to this. I wouldn't just be happy holding what I've got. I want to get more risk into this if I can. If I don't have it, I'm happy to add some risk on this one. I'll let us keep moving to UNI, which is Universal Holdings. It's one we did look at. I certainly shortlisted it many times. So I'm guessing some of you are on it. You sort of persevered with it. I don't think it gave you any great signals to sell, did it? I mean, whilst it was holding above that long-term trend ribbon, the sort of the cushion that it was providing, Michael, I think you're probably happy with it, and with these lower shadows as well. If you got out any, it was no more than a -3rd here, and therefore enjoying what's going on here. And I think you can continue to enjoy it. I'm just going to go pretty much ditto on the last one, because there's a big major point of supply up there. We're miles away from it. A little bit of a round number at 5. Maybe we're seeing some of the influence of that coming into today's candle, but I've no issues with owning this at all. Would I add risk to this if I had it? Look, next white candle, yes, especially one that closes close to 5, telling me that we're not worried about that. And I don't think we probably will be. It's not like we've never been there before. So kind of go ditto on the last one. We might find better setups though, just given that last shadow there is, some telling us there's a little bit of supply in the system. Let's go. We've done Ramsay for Hanelli. Hopefully that was sufficient analysis. Well, I don't think I could have been any clearer on Ramsay, could I? Let's go to Resmed, which is a really good chart to look at, because it's one I think this might have defined the aggressive setup when we started talking about it again. No, it was probably back here. I did a lot of tweeting about this, and this was kind of the sowing the seed. I think it was in between me being at Think Markets and me starting these again. So I only started these in January, but sowing the seed on Twitter of this idea of this aggressive setup, where I said, well, actually, we're seeing enough signs here that this can turn. I understand that it's not doing the classical turnaround play that I taught you up to that point, but there are some really good signs of an aggressive setup here. Anyway, it's obviously gone up, starting to pull back into this long-term trend ribbon, and I'm quite concerned actually by what's going on here. So we're back into lower peaks and lower troughs. We're seeing obviously a big supply candle within the context of the last few candles, not within the whole trend, but enough to get it going. Little gap here, confirming the supply. So this day here, look, that day I could go minus 1/3 on that day, because it's also near your round number as well, like $30. So you've got to think about how many people kind of bought it close to 20 and then just looking at 30 to flip it. So look, I think you could go minus 1/3 on that candle if you're having a really good trade, and then that gap there is concerning. Maybe the lower shadow saves it, maybe that candle saves it, but then I think you're minus 1/3 there, and then I think that candle there has you out of the trade. So for me, I don't think you have any risk on this trade right now. Okay, put that aside. That's me, and that's how I would trade it. And look, if you, for whatever reason, you missed the other ones, it's compulsory here with this gap and then black candle, right? I mean, you can't not get that one. That one's blatantly clear. All right, let's put that aside. Now, let me speak to all the people who didn't do any of that, all right? You're just holding because that's what you do, right? I buy stocks and I hold them, and if they go down, I don't get out. I wait till they go back up again till I'm in more profit than that point where I knew should have got out. But like, I can't get out now, Carl, because I should have got out then, but I didn't. So I have to wait till it goes back up to at least that price. Now I'm speaking to you. What I would say to you is, it's never too late to start to do the right thing. I wouldn't be comfortable holding a full risk position on this. So even though this candle is sending it back up in the right direction, I would still start to do the right thing tomorrow, which is to reduce my risk. I would then be very attentive to a close beneath this level here, because it's kind of your last line of support, isn't it? Because you're now beneath these trend ribbons. You've got the short-term trend ribbon is rolling. You've got the long-term trend ribbon, which it's tried to act as dynamic support here, just couldn't. And now we're down here. It's probably going to act as resistance and come down through here. So I think this one's on notice, and I think you should be doing the right thing on that. And the right thing is by my model, not the right thing by what is going to happen next, because we don't know what's going to happen next. You could get out there and it could get taken over tomorrow at $40. I don't know the future, but it's up to you when you start just following the damn plan. We've talked about 360. I'd mentioned it at the very beginning. It was the default chart on screen. So let me just say everything looks fine. Is that a big supply side candle coming in there? No, it's not. It's a little bit of an upper shadow. Yes, supply is starting to have an impact compared to, say, the day before. But I still think you full risk position on this because it hasn't given you a reason not to be. And you know what those reasons will be. They'll be black candles, they'll be upper shadows. And you know what to do when you see them. I don't need to remind you. Let's go to TPW. These are for Michael. And well, look, there's a little bit of supply coming in, isn't there? It's small. It's a small amount of supply within the context of the broader move. Today's volume's a little bit higher, maybe a little bit more concerning. That's not concerning at all, that second from last candle. I think I'm still full risk position on this. I can't see any reason not to be at this stage. The good news is we've got a really clear level that's very close by. And I know that, you could argue, oh, Carl, look, if it closes beneath that level, I know you're going to tell me if it closes beneath that level, I need to manage my risk. But at the same time, Carl, if it does close beneath that level, all it is just in that juicy light green zone, which, to be fair, has been the most amazing make-believe zone that doesn't actually exist, Carl, that has somehow just continued to push prices up, right? And I get that, but I think I'm still taking the precaution of, if I see that black candle, I'm going minus 1/3. And you've got to remember that if you're doing that, you're still plus 2/3, right? So that's why we're plus 2/3, because we are trusting that light green zone is going to do its work, do its job, and provide dynamic support. But keep in mind, it is imaginary; it doesn't exist, and it may not. And then we would take further steps to exit this one. But sometimes you've got to give yourself the greatest chance of making, you're really riding that winner, and that requires you to give back a little bit of profit every now and then. Happy birthday, Carl, says Huzel. Thank you, Huzel. Got your message earlier on. It is my birthday today, and that is why we're having the public holiday over here in WA, of course. LNW. Lots of stuff coming through. Appreciate that, everybody. LNW. Light and Wonder. Yeah, this is a fairly new one. I think it looks great. It's another software company, if I'm not mistaken. I don't know much about them, and that bothers me. I mean, look what a wonderful chart. This is a picture of excess demand. If I had it, I would hold it 100%. I wouldn't be letting a share of these go. It's a total yes for me. If I didn't have it, I'd happily be looking to add some risk on this. I do know the brokers really like this one as well, as you know, I get that broker research coming through every day now. So I'm very happy with that one. Why no Twitter shortlist lately, says Hoozle. I honestly, I don't have time in the afternoons now, just getting out this evening update, and I've really put a lot into that evening update. You would have noticed I'm doing lots of charts and all sorts of weird and wonderful things in there. So it's pushing me into a time where I actually have to leave and go pick up the kids from school on the way home, and that is preventing me from doing it. And I do have to call quits on it at some stage. So you might not see them for a while, but you don't need them, Hoozle. I know you can find exactly those trades yourself. And honestly, the people on Twitter, I don't think they appreciate them anyway. I know you guys do. Look, never say never, but I'm aware of that. From Nicola, hi Carl, can you have a look at DIS in the US? I will do that for you. 4DS, I'm pretty sure I've done. Maybe I did 4DX. Let's do 4DS just in case it's different. It is slightly different. Not the worst chart I've seen, but I don't need to spend a lot of time on this because I've explained to you why it's not the best. There's lots of good stuff happening here. If I had it, I would hold it. If I didn't have it, it's not the one I'm going to go for, but I can see some decent stuff going on. And you know I'm going to draw a line probably like that and probably like that and say, hey, it's you're in charge here. Keep an eye on it. If we close beneath those zones, something's not right. And therefore, as much as you love this company, as much as you know what it does, I really think you should be managing a risk. But until then, you're probably fine. Let's go to BVS, which is one we have looked at many, many times. Hopefully many of you had it and made a nice whack of dough on it. That would be wonderful. Make me very happy if that's the case. What did we say? We said a minus 1/3, didn't we, last week? This candle here, and I totally stand by that, even though it's gone back up. Totally expected. That stuff is going to happen all the time. But that's why we only get out of 1/3, because everything else is wonderful and we're still plus 2/3. But always, as much as you would have got out of that 1/3, I don't think you're fussed if it's going back up. And hopefully that's you now. Hopefully you're going, yep, I don't care. I don't care. I honestly couldn't. I'm just happy with the trade. Got out a third. It's a bit higher than that. I could not give a stuff, but because I've still got this. And you also know that really all you're doing now, and this is the other reason why you're probably not fussed by it, is you're just waiting, aren't you? You're just really looking for that next signal. And you're mindful that it could come in just beneath the last one. Okay, so your mindset has changed into, I've just got to keep an eye on this now. I've just got to manage my risk. I've just got to read the demand supply, and I've got to manage my risk accordingly when the time comes. Now, we may not see that candle. We may see something like this, and this is literally, I mean, these are the possibilities, aren't they? And they've got very different connotations. So it's not going to let me do it. I wanted to show you the two options. So let's pretend that's filled black. I mean, that means something to you, and this means something to you, and they're very different. One is take risk off the table. The other one is add risk back. And I don't know what's going to happen next because I can't see the future, but that doesn't matter. When it happens, you'll know exactly what to do. Isn't that wonderful? And I think it is. I say that with all sincerity. I think that is wonderful. Okay, Novonix, which I pointed out in my Friday evening update. I said, look, it looks really interesting here. And it is an aggressive setup, don't get me wrong. It's probably getting close to a turnaround play, to be fair. I think this candle here makes an aggressive setup. We obviously talked about this recently. And then we probably said, well, if you didn't buy that candle, that's the one you wanted to buy as an aggressive setup. Since then, we've been blessed with this candle, which confirms everything we've said in the past. And this one here is neither here nor there, but it is $1. So we shouldn't be surprised by that. Look, with aggressive setups, the problem is you're always fighting the past, aren't you? You're always fighting the past. But you go into these eyes wide open, okay? And some of you might not have that affinity with these setups. Some of you I know love them because you're bottom pickers and you want to find that bargain. But some of you I might have actually turned you off on these completely. You go, look, I'm not interested in that. I just want to see the other ones, and that's cool too. I don't mind this. If I had it, I would hold it. Today's candle isn't ideal, but I don't think it's a deal breaker. If I didn't have it, or today's candle is not ideal, I'm not adding risk today. But next white candle I could, but I would have to be really hunting for this aggressive type of setup, or I would really need to love the Novonix story, okay? We need to do Envision, which I think is fine. Obviously had that big candle up. Somebody asked me about it on Twitter. I sent them some charts. No need to do anything based upon that last candle. Would I buy it? No, I'm not going to buy it on that last candle, and it's a bit of a ways away from the light green zone, and probably risk reward up to 3. I probably won't be able to make that work. It's more of one of those setups where you go, well, I'm not in it now. I'm not in it, so maybe I've missed this. I've just got to look for something else. Not to say it isn't looking fantastic. It is looking fantastic, and I would happily hold every share that I had if I had it. Let us do, going from ENV, we're actually going to go to ENV, which has some problems. We talked about adding 1/6, didn't we? 1/6. So we said it's small, it's speculative, but this candle here was amazing, and I would stand by that I think it's one of those, you're just adding enough just to almost just prove to yourself that you can do it. It hasn't worked out, and I would say that whatever you put in that one, you are now going to head out the other way, okay? And I don't think a great deal has been lost or on that. So whatever is there to there. I know it sucks. But hopefully you did really put in a very small amount on that, so it's that amount which really doesn't matter to you. But I think given the candles on screen every day of the week, that is a manage your risk set of candles, and therefore if we've only put in X, then we need to be minus X on that one. And this thing could be $1 tomorrow. I don't know, and honestly I don't care. And even if I got out, I wouldn't care. I'd be annoyed for a second, but then I'd remind myself I just followed the system, and that's all I have to do. If I do that, I'll be fine. Okay, BGA got some problems here. I wouldn't be running a full risk position on this. I'd be 2/3 at the most, and then I'd be watching what happens in this light green zone. If we see some black candles in here, upper shadows continuing to print in here, if we can't get back above $4 really quickly, I would continue to manage my risk on this one. JND on the ASX. Now, yes, we're at the end of the Aussie ones now. This is the last one we're going to do on the Aussie ones. I don't think I've got the right one there. JND, I can't find it. I'm literally from unknown. Next time, put your name in. Hi, Carl. Could you please look at JND ASX then? Literally what's written here. Maybe have another go and let me know if I'm on the right track. Maybe you've mistyped it, but I can't seem to find JND there. Let me look somewhere else, and maybe I'll find it here. No, I can't find it. Sorry. Okay, so give you another chance at getting that right for me. In the meantime, evening updates are excellent, says Brett. Thank you, Brett. Evening updates are fantastic. So much effort goes into it. A lot of effort does go into it. Evening updates are great reading. Make sure you tell them. Okay, make sure you send in an email or something, say Carl's the best. That always is helpful. Let us head over to USA now. I'm going to work my way back up the list, and we will get everybody's questions answered here. Thank you, Michael. Wishing me happy birthday. We're going to Peter. Peter's got CRM, which is Salesforce. Of course it is. What a wonderful... you can't see that. Don't worry, I'm coming. There we go. What a wonderful chart that is. And this happens every week, isn't it? We fight. We scrape. We grind through the price action in Australia. And then we get to the USA and we go, look at that. It's awesome. I can't fault it. If I had it, of course, I'd be holding all of my shares in it. If I didn't have it, I'd be seriously thinking about buying it within the context of let's see what else we've got today. Okay, but yes, that one is definitely on our shortlist for today. Let's go to SMLR, which is Semler Scientific. Well, okay, look, it just because it's not doing what Salesforce is doing doesn't mean it's a bad one. It's just not there yet. It could be something that prints big white candle tomorrow, the next day we need to know about it. I think that's the category this one falls in. There's nothing I need to do about it based upon Friday's candle. It needs a big white candle, preferably closing above 50, but more than that, I think closing towards this point supply up here. So it's sort of a 51.50 close. And then I think, yeah, absolutely, you could add some risk on it. I'm just going to zoom it out. I just want to make sure out the corner of my left eye, there's nothing overly sinister there. You can see that big shadow coming in on the weekly chart. That's a little disturbing. there's a little level here, and I'm pointing to this trough here, so 67. So it's fine. There's nothing awful there that would dissuade me from taking the trade if I saw the right candles. But I need to see the right candles. Look, that's if I don't have it. And if I had it, I'm a little bit concerned here because I can see these lower peaks coming in, and you can see through, obviously through here. I can do the continuous draw, but anyway, we'll do it this way. And through here, double clicking, and we're coming down here, right? So we've got the lower peaks clearly in the system. We've got black candles, upper shadows punctuating each of those peaks. And I would suggest to you that if we closed beneath here, we are in manage our risk mode, and that will obviously move in a second to under there, okay? Let us go to LLY. FND. We've done FND, unknown. We did that earlier on, so catch that one in the recording. Eli Lilly. I said it looked very good. If I had it, I would hold it, but not getting in necessarily because of the last couple of candles. However, on this one, which is Eli Lilly, I would happily buy on that last candle. Obviously, the trends are exemplary. The price action, we're having a little bit of a wobble here, and that I think that's, I'm just going to drag this down. There you go, $800. So nothing too sinister going on there. It's a little bit of round number stuff going on. But the pullback, to be fair, did hold into here, which is good also. So we're seeing previous areas of supply act as demand now. Happy with that one. No objections to adding some risk on that one. That was for Peter. Let's go to Nicola. Has BAH. You've been very patient, Nicola. Thanks for waiting. Looks good. I could buy this one if there really wasn't anything else going on, because I do think the next candle will print white, and I'm saving myself some time. I'm getting it a little early. But given there's some other stuff which is a little bit more active, maybe I would probably lean in that direction. If I had this, I would hold it, obviously, because it's just got the greatest trends. We're seeing a little bit of a compression here. We're just digesting. We're digesting this big jump post-earnings, and we've got a little bit of 150 going on, and I think it's fairly minor. So happy holder if I had it. I wouldn't be looking to manage my risk anytime soon based upon those candles. Obviously, if we start to close beneath troughs, we've got some problems, but we'll cross that bridge when we get there. If I didn't have it, I could add some risk on that. But I think we're going to find something with a more inspiring candle, aren't we, before we finish tonight? Let's go to CCJ, which is Cameco. So that's the Canadian uranium company, of course, the largest independent. So independent, not owned by government, independent listed producer globally. It's holding well enough in the long-term trend ribbon. We are hoping it will continue to do so, but we do have some issues here, and some pretty big issues in here. And I know many of you would be disappointed by uranium stocks, but also hopefully you've implemented some of my teachings on uranium stocks, which is treat them very differently from every other type of stock you own, and when they're getting frothy, be absolutely just brutal on any sign of supply you see to take some profits off the table, and give me a thumbs up if you're starting to understand why I gave you that advice many months ago now. There you go, the thumbs up. All right, they're not created like other stocks, and so hopefully that advice has served you well. But I suspect some of you probably still held on a little bit for long because you just kind of got caught up in that uranium euphoria, didn't you? That's the key candle there. We still need to look at candles. We still need to look at price action. That's a big problem there. I wouldn't be holding. I don't think I'd have any risk after this candle. Given this, given these two here, and then given the close beneath that trough there, I think this is the candle where you actually quit Cameco. You've got no risk here. So you're flat here, which if you followed the system, you wouldn't be concerned about it. Now, if you didn't follow the system, you kind of go, well, thanks, Carl. I didn't follow the system. I've still got some, mate. What do I do? Long-term trend ribbon is everything. Clearly, if we close beneath that, your last share has to be out the door. But before that, if we close beneath that little trough there, I think you're really starting to manage your risk. And you might get a signal before that. You're going to get an upper shadow or a black candle before that to at least start taking some off the table. Until then, you can hold it on the basis that it's still holding that long-term trend ribbon, but you're not in a great position, right? I know you're feeling it, and you just have to now start to Just trade what you see. You should always be just trading what you see. Okay, this one looks great. I think that, again, we talk about textbook candles. This and only looking for charts that are doing certain things. Why are you not drawing an arrow? There's an arrow. Only look for charts that look like that, ladies and gentlemen. Like if you only ever look for those charts on that arrow and never look at another chart again, you'll be a very, very happy trader. This one's fine. Obviously, had some good earnings. Very shallow pullback. If I had it, 100%, I'd be owning it. I wouldn't be selling a single share if I had it. If I didn't have it, it's a little bit of a ways from the light green zone. You know, it could consolidate here. It could just throw in a few candles that might come back, just get you in at a better price a little bit later on. Consolidate, digest this gain. I don't think I'd be chasing it here if I didn't have it, but you know, there's more than enough in there if I did have it to hang on to it and give it that benefit of the doubt. Where am I going next? Deep breath. I've done those. We're going to here, HYLN. Fascinating charts tonight. Really good. Look, this is a really nice turnaround setup. Not the greatest 3 candles in a row. I mean, here's the good candle. So we talk about nice setups, and yeah, look, I think this is a good one. Not great because it didn't close on the high, did it? But then these really aren't fulfilling the potential that the setup had. And this kind of looks like Novonix, doesn't it? It looks very, very similar. Completely different companies, no doubt, but it just shows how demand and supply sometimes plays out. Genuine turnaround play. The other problem, of course, is we do have some stuff going on here, which I'd be concerned about, and I think we're a little bit too close to that. If I didn't have this one, I don't think I'd be looking to buy it. If I did have it, I'm okay with it, but again, I'm super attentive to signs I might need to manage my risk. Not seeing those signs right now, but attentive to the possibility they may start to appear given the candles we've had. KBH, if I'm not mistaken, is the home builder. KB Home, one of the biggest builders of homes in America, and that is taking the first place chart tonight. Isn't it? That is the best chart I've seen, and for me, that is one of those compulsory buys. Covering my ass. Tomorrow, they could announce something horrible and be at $30 a share, but that is a 10 out of 10 setup for me. So well done to you. Nicola and NET to finish off for us. Cloudflare is not as good as that one, but still very, very good. I think this is one you've talked to me about in the past. Again, if we're going to draw those perfect candles, if we're going to draw them, yep, there we are. We are going to draw them. That's the perfect candle there. Pulling back, it's all good here. If I had it, I'm 100% a holder. Maybe I could have knocked out a third around here somewhere, lower peak, you know, couple of candles, probably on that candle there, but happily holding plus 2/3. I'd be concerned if we started to close beneath that trough there. I know this is tough because it doesn't let me do it. Let me do this, and then let me do this. Oh, gosh. That. And make it straight. There we go. Okay, beneath there, I think we're managing our risk until then. We're okay. Let's go up the screen to ENV and W2V. I don't think I did yours. I definitely did ENV. So let me just head back here and just double check. I did this other one here, which is W2, not that one, W2V. Yes, okay, W2V. Well, it looks okay. I mean, we've got a pulse, so that's the important thing. We've got volume, we've got price action. I think we're fading though. This upper shadow today, massive supply event here. Like massive, compulsory. That candle is, look, we're done. Party's over, at least for a while. Did it sort of reignite itself today? It tried, and if it closed on the high, I reckon it actually probably could have done something really good, but the supply was reinforced. So I'm going to say, look, if I had it, look, I'm probably finding a way out of it. If I don't have it, then I'm not looking to get into it. Okay, so just for completeness on that one, heading back to US stocks here, we are going to go to Disney, DIS. Looks good. Yeah, I don't think it's going to be in the looks great category. And the thing I'm worried about is just that point of supply. So in terms of reward to risk, if I get in here and then I've got to deal with that, I couldn't be bothered. You know, let me find something that's completely just breaking out, like that other one we just saw before, KBH. But, you know, nice trends, good candles, price action, okay. Yeah, it could be better. If I had it, I could hold it. I could continue to see how it goes, and I'd be looking to manage risk only beneath 105 there. Let us do the HIPO for Brett. I like this one for a turnaround play, aggressive setup, turnaround play. I think this is your aggressive setup candle here. So we've talked tonight a lot about textbook setups, textbook candles. That's your textbook aggressive setup right there. Okay, so if you see, let me turn this one into the front. There we go. That's what we're looking for. So if we only looked at the other ones for turnaround plays, if we only look at this one, and there's even some volume there to confirm, the volatility's coming in for aggressive, we're happy. That's probably more of a turnaround candle than an aggressive, but probably more in turnaround phase. I'd happily own this. I don't think I'm jumping in just because I think we've given up too much to get to this big point of supply up here, and that's all. But if I had it, I could hold it and see where it goes. You know, obviously I'm going to look out for, supply candles to start to manage my risk. SPXEW is the equal weight index, and we're going to go here and it will magically appear, and this is just to have a look, and look, it's going well. It looks a bit like the Russell, in fact probably looks even better. So this is actually giving me great comfort now. This is democratizing the S&P 500, giving an equal weight to every stock, not just those big ones that typically with the regular S&P 500 are moving the index, and that actually looks magic. It looks like KB Homes, which is kind of a reflection of how everything else is going, and we're just getting some really wonderful, I think, signals from the US. We don't know what's going to happen next, ladies and gentlemen, but it does feel like we are on the verge of a really nice move up here. Fingers crossed it actually plays out that way. It would be good for all of us. Bull markets are far easier to trade than bear markets, I can assure you. Okay, LNW, we've done that one. PWH, I didn't do for Jackie. I don't know how I missed it. Let me do it here. PWH, we're going to go to stocks, power holdings. I think, yeah, look, I think you could probably take if you're going to knock a third off the table, I don't think that's a terrible thing to do. We're 100% still holding 2/3 and then seeing how we go with that. But just you've had a good run. A little, just on these black candles, hey, if you didn't want to do that, I'm cool with that as well. Okay, maybe I'm being a little bit pedantic there, Jackie. We've definitely done. I'm pretty sure I did TPW. I can't believe I missed all of these. Maybe I didn't do TPW. TPW in Australia, of course, which is Temple and Webster. It doesn't ring a bell. Would I minus 1/3 that? Or I'd be pretty. Yeah, just. Again, yeah, I think I'm going to go minus 1/3, and it is really being pedantic. But this shadow here, the fact it really did engulf that first day, or that day, and then the confirmation. I think I'm just going to 1/3 precautionary measure here. I'm still 2/3, still willing it up, but I think just taking a little bit off the table, given it's had a good run, and I've got a signal. I've got a signal, clear signal on screen. There's a bit of supply around. Hey, if there's a bit of supply around, take a bit off the table. I think. Our response is commensurate with the market, isn't it? And I think that kind of sums up my whole strategy, doesn't it? RHC we did, UNO we did. So I'm just double checking. I've got all the Aussie ones. We're getting close to the end of this one as well, and we're getting close to the end of time. Wonderful, Masco. Happy buyer here. Happy adding risk on this. If I had it, I'd be happily holding it. That's a lot of happies. This chart makes me happy. This one's from Jason. Let's do Jason's other ones now. WAB, which is Westinghouse Air Brake Technologies. Sounds like one of those classic American industrial firms, right? Air brake. That's all their air brake. That's all they do. That's specific, but they make a pile of dough doing it. It's just a company we could only dream of having listed over here. Wonderful chart. If I had it, I would happily continue to own all the shares that I own. I'd even be looking to add risk, because if I didn't have it, I'd be adding risk anyway. But there are 100 candles there, aren't there? We could have got into this earlier, but I still think it looks very, very good. Let us go to CNM, which I was going to say, it's something else. I thought it was a mining company. Core and Main, I don't think it is. It looks amazing. It can't be a mining company because it looks too good. And this is this is the chart that makes me happy. So 100% holding it, adding risk to it. If I didn't have it, I would buy it. The only thing that is a little bit, $50, but it doesn't look like we're afraid of it. And I'm guessing it's all blue sky from here. It is. Just accelerate. It's amazing. And if you feel that, oh, Carl, it's gone up too much, I can't buy it, mate. I know, I've been listening to you now for months and you got me half convinced, but I'm still half skeptical, mate. I can't buy those ones. I get the turnaround plays and I get the aggressive ones. They really speak to me, but I can't buy that because I know, Carl, let me tell you a story about me, Carl. If I buy that, it's the top, mate. And, if anything, I'm not going to buy it just so that everybody else can have a good run on it. Okay, I'm going to take one for the team here, Carl. I'm going to do everyone a favour, and I'm not going to buy it just to let them have a chance. Okay, because I tell you what, one time I bought a chart like that, and it just went straight down. You can't believe. And well, I get how you feel, but let's get into the specifics of your argument here, which is, one time I bought a chart like that, or two times, or buy a chart like this 100 times. Think about this. Buy a chart like this 100 times. And I bet you more than 50 times it's going to be right. I bet you probably more than 50, more than 60, more than 70 times. You know in your heart that's the odds. But it still means there's every possibility you're the arsehole that gets the 30 out of the 100 wrong, right? It still can happen. So I can't even promise you that do it 100 times and you'll get it right, okay? Because we don't know the future and anything can happen. And maybe you just are unlucky. But let me encourage you to buy these, to buy more of these, and just to see how they go. Even if, and this is kind of the key part of it, and this is, I think, the most important part of anything I've ever taught you, is you don't have to go all in on every trade. You can throw a few bucks at this one just to scratch that itch and just do what Carl told you to do, okay? If that helps you, just throw a few bucks at these ones. Speaking to that person. I don't know if that's you. SHW. And I knew I had to make that speech because I know I'm going to see a bunch of these charts when we talk about America, and this is a ditto. I can't fault it. I think you need to have some risk on these types of companies. Given we've looked at these industry charts, this is amazing. This is up there with the KBH trade. I look at this and I know it meets everything. Like it's the template of the perfect trade, and then my heart sinks a little bit. It's like, oh shit, man, I wish I was on this earlier. I don't know that feeling, but we still need to just trust that demand is still rampant in the system. And I know we feel that, I've missed it, but the people who are getting in on Friday towards the close there, they clearly weren't afraid like you are. Okay, so you need to kind of say, well, this is how I think, and I'm going to understand that, right? But now I'm going to look at how the market thinks. I love these charts, Jason. And in fact, I might have actually skipped from Jason's into Perry's, and that's why they've gone so good. Jason, not to say that yours weren't fantastic as well, Jason. I think you were going pretty well, but I think the last couple might have been Perry's. Let me skip back to Jason, who's giving me the laughing face as well, because I think maybe Jason was taking credit for those. But to Perry, you have to agree, these are pretty darn good as well. And that is a wonderful chart. And again, absolutely, these are the charts we want to have risk on. Let's do WING. So it's an absolute yes on all of yours, Jason. They're amazing. Brilliant. I can't fault them. And this is another one. I'm getting goosebumps when I look at these as well. Let us now go to Perry's. And obviously the Westinghouse air brake was his, just to give him the credit for that one, which I love. And SHW was also his. But thankfully, coincidentally, Jason also had a bunch of good ones as well. AMD, which I put up there with my two best setups tonight, and LNW, which I'm guessing is the American listing of what we saw in Australia. So that's a yes as well. Through 100, it's had a bit of an extension. That's the only thing. So if I can find something maybe it's a little bit closer to the breakout level, for example, again the theme, tonight's theme, I like to have a theme every night. Tonight's theme really is that textbook candle, isn't it? And just waiting and looking for that textbook candle. And we've discussed textbook candles for turnaround plays. If you've forgotten them, this session's been recording. Don't panic. Go back and look in the recording. And I'll highlight in the descriptions in the YouTube description. I'll say textbook. I'll put textbook turnaround setup. We've also seen a textbook aggressive setup, and this is your textbook bottom left, top right, your continuation setups. So we've got my three setups, and you are seeing the textbook examples of those, so that We only talk to each other on Monday nights. In between Monday nights, you know exactly what to look for. That brings me to the top of the list, which is therefore the end of the list. And I think we're all tired, and I think we're all ready to end the session. So let us head back to here and just remind everybody that I don't know the future. I wish I did. And as much as I can be enthusiastic about particular setups and pessimistic about others, anything can happen next. So, in other words, don't blame me. Of course, everything is general advice. Consult a financial professional to determine if that advice is appropriate for you. Apart from that, it's been a pleasure chatting with you this evening. The recording for tonight's session will be made available to you, if not tonight, certainly tomorrow morning. It's been a pleasure chatting with you. All the best for your trading and investing. Until we catch up again. Bye-bye for now.